Hello and welcome to another update video about Ethereum. We currently see very good structure, promising structure pointing here to the upside. It has so far been the right decision to ignore the bearish count. At the moment, I think it's fairly unlikely to, at the moment, from the current perspective, to break below $1,000. It's even, in my opinion, unlikely to break below 1218, which is the 78.6 retracement of the larger wave 1, which we formed here into the February highs. Yeah, this is a crystal clear impulse which formed off the November lows. Wave 1 was a bit of a diagonal pattern, then the wave 2 down, wave 3 up, wave 4 down, wave 5 up. I'm actually thinking the wave, I think that actually needed to sit here. That doesn't make so much of a, that's a bit, it's not important really where exactly that wave 1 sits from the current perspective. But we do have a diagonal pattern here, or I think we could count it as an impulse at the time. We need to double check that. It's not very relevant at the moment, but certainly a crystal clear impulsive structure to the upside here into February. We then came down in a wave 2, hit the support area here, broke the previous high. As per the most basic Elliott Wave rules, we have all the confirmations we need that we are now rallying higher, $2,000, $2,500 and beyond. Very careful, that doesn't mean it will happen. It is all probabilistic, certainties and confirmations are different things. Confirmation doesn't mean certainty. It means it adds to the probability or to the probabilities. There's only potentials and probabilities in this market. So, however, there's no point focusing on a bearish case at the moment anywhere in the crypto market, really. At least not with regards to most of the coins I cover, because we're holding above support. There's no point. It is. If I see someone focusing on the bearish count at the moment, it's more like hopium that we get lower prices. That can, of course, happen. I mean, you know that. I'm not making the markets. I mean, the bulls can fail, absolutely. But that's why we manage risk, and that's why everybody needs to decide for themselves, how much exposure do they want to have. The support areas are very clearly defined. If they break, you need to measure your risk. How much portfolio do you want to have? How much exposure do you want to have for each asset? Understand the key support levels, they are on every chart, measure how much risk you can take, and then decide if you want to be in there or not. Because the thing is, I would make that decision now. I'm equipped with altcoins that I bought on the 10th of March when we hit these support areas. I'm equipped with my core position for ETH and Bitcoin. I've got my hardware wallet. I'm happy. I've got some grid bots running. But what I want to tell you is not that definitely we're now going to go in a third wave. But what I can tell you, this is probably the best opportunity, or the best, let's say the highest probability that we've had for a long time to have a third wave rally. And all that needs to happen now is that the bulls do it. The bulls need to take it up now. If the bulls don't take it up, they will fail now if they don't do it. Because this is basically a make or break point where we are now. We're just hovering below resistance. We are hovering above support. We've got structurally everything we need for that rally. If it will happen, only the market will decide. But if it happens, the market, the charts are charged. So anybody who doesn't make that decision for themselves, how much they want to be exposed, and delay that question, the answer to that question for too long, could be left out. I'm just saying, answer that question for yourselves. I'm not telling you to buy or whatever, because that's an individual decision. But answer that question for yourselves. I would do that this weekend, because you know how it works in the market, right? When these rallies happen, like here, it goes quickly. And that's when the FOMO will start in a third wave. We know that in Elliott Wave, that when a third wave rally is starting, it is the FOMO wave. Because, I see it, a lot of people are still in denial, but that's typical. Wave 1 is the denial wave. Wave 2 is the bear market wave, bear returns. That's why it was quite clear that all the bearish news that happened about the banks and everything, that was a local bottom. So we are now rallying again. Wave 1 is denial. The wave 2s that we've seen, they have been very shallow. They have been super shallow. They should in some cases have come back a little bit deeper. I think Ethereum always hit our trend reversal areas, but I think Bitcoin didn't a couple of times. And it's just, you see that in a market that is pushing to the upside. You don't necessarily see those deep retracements. Market should come back deeper in a wave 2, but it doesn't need to. Right? The market doesn't need to do anything. It's just probabilities. And as long as support is holding and we're in an uptrend, the trend is going to continue. It's as simple as that. That's why I always emphasize the idea of having a core position, having floating positions. Floating positions can be used to take profits. Core positions could be the longer swing term positions, right? Because a lot of people exited here completely out of their positions, I think, with the hope to buy back lower. It didn't come back too deep. Well, it came down quite a bit, Ethereum. But yeah, I mean, wave 2s in a strong uptrend can be fairly shallow. We're seeing that. And again, we've got this this layered cake of support here. So we've got our micro support levels here against 1717. We can focus on higher. I did say that before, as long as we're holding 1717, I assume a breakout is in play. Yeah. I think 1810 is another level to watch out for here, but 17, all we do is if that breaks and the bulls fail to rally from here, it would just fall a bit deeper into support. It would still not be bearish, right? It just means a deeper pullback in a bullish scenario. Below 1717, we've got 1662 and then 1472. Below 1472, probabilities, I would say, increase that this rally is going to fail. But until then, we have upside potential, yeah, and it's probable. So this is where we are, and all really the bulls need to do is to really do it now. But if they fail, they will fail here. Okay, so it's a make or break point, but the chart has good potential to do it. So here also of the Monday low, my count is that this here is a wave 1, here a wave 2, then here a possible additional wave 1 in the making. We don't have 5 waves up though yet in this additional wave 1, and then there could be another wave 2, and then we could rally from here. The thing here is that this latest wave has only 3 waves, but we're consolidating. It looks like a wave 4 what we're doing at the moment. WXY could be complete, but so far it's just charging up the chart. It just needs to move now. And again, I can only repeat, against 1717, I focus on higher. And if this third wave rally starts, it should start at some point in the near future and could really lead to Ethereum reach $2,000 and beyond. But note that if the bulls fail to take the lead here, and they fail, they will fail exactly here, because this is just below resistance and it's a make or break point. But we've got that, again, that layered cake of support that can provide different protection from the bear market, basically, right? So it's going to be interesting. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.